Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So I already know what the comments on this video are going to say. Oh, another next 24 hours video, or oh, we got to prepare again. Guys, I just want to quickly say that, yeah, we need to prepare. The next 24 hours are going to be volatile. If you are sitting here waiting for a big buy opportunity, or you're waiting to see something happen, yeah, the next 24 hours, we're going to see some very significant moves in this market. Why? Because what's about to happen in the next 24 hours will significantly impact the stock market, which will also have a big effect on crypto. If you don't like the videos talking about, real world events and what's happening with stocks, then maybe these videos are not for you. But I try to keep a completely unbiased crypto view on these markets, and I want to give you guys the most up-to-date news that will affect your portfolio. We're not just going to sit around waiting for some crypto fairy to, say, hey, now it's time for the markets to pump. No, these things are what really kind of determines what happens in this market, what happens, next. And we have to prepare. We have to make sure that we are ready, because these violent swings to the upside or the downside could ultimately shake you out. It could change your view on the market. And it could also change what kind of cycle we are in, or what phase of the market we are in. Now, what am I talking about? What am I addressing in this video? Well, it's the financial weekly news. We are now getting into a big day for finance, because the Fed is going to update us on rates. Now, the interest rates are definitely a big sign of either one, we're moving into a better economy, or two, we have some issues. Now, I'm going to talk about that here in a second, but first we have to address what's going on outside of the Fed decision and what could actually impact what the Fed does next. Number one, we look at the tariffs. Okay, we just saw another big announcement from the Trump admin that they're actually going to match the tariffs that other countries have charged us on domestic products. Now, do I agree with this? 100%. The issue is that this will impact the market. This will have negative effects on the markets because people do not like the trade war. They do not like the tariff discussions. I've said it many times over. It's not that I don't like, the whole idea of what comes with tariffs. And, I like the idea that we're leveling the playing field here. The big problem that I have with it is that it's during a liquidity year, where we do have liquidity improving drastically. It was improving massively into 2025 until the trade war broke out. So again, I'm more so looking at this from a market point of view, not is this going to be very beneficial for the US, or is this a fair, move that the US is making? Because again, that's two different things. Now, could the tariff discussions and the decisions around tariffs impact the Fed? 100%. 100%, because again, the Fed is not dumb. They understand what tariffs mean. It does slow the economy. It brings most of trade, in terms of like trade finance, to a halt. So the supply chain all of a sudden slows down. A lot of big companies no longer can get goods. The economy itself actually slows down a bit. So again, this does cause a lot of problems. Now, also China. Now, I'm not paying, to get this Bloomberg article, but what we have been hearing from China is that they're going to halt natural gas. They're also going to halt a few things around like processed meats and meats in general. There's a lot of things from China that are now starting to get halted, which again is delaying, trade. The supply chain itself is starting to slow down, which does cause problems. It's that simple. Now, on top of that, we also have Trump trade wars are slowing global growth and fueling inflation, says the OECD. Now, regardless of if you want to believe this or not, it is true, right? I think that is very clear that it is true. Now, is it fueling inflation? It's questionable, right? we know that the cost of goods are going up. We know that the cost to actually import those goods are also going up. Things are changing drastically when it comes to, just supply chain and trade finance itself. But, again, when we really think about it, the tariffs that we are starting to put on these other nations, it's because they have been, charging us massive percentages on tariffs. So I feel like this is only fair, but again, it's during a liquidity year. It's during a year where, the markets were supposed to heat up in a big way, and it is causing some turmoil. But we also have Israel. All right. So for those that are not aware, recently, Israel just resumed the war in Gaza. And a lot of people are wondering why, like what's going on here. Well, the big thing is that they're saying domestic politics is a big deal when it comes to this. Ultimately, a lot of this stuff is out of our control. So when it comes to the market and when we're trying to predict what's happening in the market, these types of events, it's not a black swan. I know that a lot of people will most likely say, all right, well, this war is a black swan. This has been ongoing for a while. This is just conflict. This is political conflict. It's geopolitical conflict as well. Why is this happening right now? We don't know, right? Nobody's going to know the answer to that. But it is happening and we need to be aware of it. And it is a problem because, again, anything around war, whether it's trade war or actual war, guess what it does to the market? It scares the market. It impacts the market in a negative way. And all of this is happening while we are marching into Wednesday with the FOMC interest rate decision and the Fed Chair Powell press conference. Now, am I too concerned about the actual interest rate decision? No. It's a mixed review across the board. We have Fed likely to pause rate cuts with clouds gathering over the economy. Then interest rate rises are as likely as rate cuts, says Jim Grant. So again, when we think about what's happening here, nobody really knows. But in my opinion, I think that the interest rates will probably stay the same. They probably won't be cutting or rising or raising rates at all. So they'll probably stay the same. Now, what's the real thing to focus on with the Fed right now? It's not so much about the interest rate. I do think that it will definitely impact the markets short term. The main thing that we need to focus on is Powell's speech. Because if he's coming out and he is, dovish on the markets, very good. Very good. Crypto will pump, massively. Everything will be good. If he's hawkish, buckle up. Buckle up because, he has the perfect excuse to be at this point with, Israel, with the trade war, with tariffs, like all of this stuff is ultimately providing him a perfect excuse to flip hawkish. I would like for us to be, cool, calm, collective, and just, say that we're getting through things. Everything's still looking pretty good. Things are looking good because, again, we already got CPI data. CPI data for February was pretty good. So, I think that the most that I could see happening here is, if anything, we get a rate cut or rates stay the same. And Powell says that things are still looking up, but we are still kind of concerned with the trade war. I mean, it's kind of exactly what we're expecting. But we'll have to watch, wait, and see what happens. But again, anything that happens during this press conference is going to impact the market. Do not play with leverage because, again, liquidations will be at all-time highs today, and we will most likely see drastic shifts in the market. So don't pay attention too much to the major wicks. Prepare for volatility. Do not focus on your portfolio during a day like today because, again, we will continue to see major swings in the portfolio today, but just prepare for that. Now, on top of that, is there any bullish news behind all of this? Because, again, so far it's been pretty negative, right? Yes. Number one, Jim Cramer is bearish. If we're being honest here, this is a direct, opposite correlation to the market. Jim Cramer is bearish, which means technically we should be bullish. We have yet to actually see anything yet in terms of, bullish price action on Bitcoin. We were trading and chopping around like 83K for a little bit of time there. Right now we're kind of trading around like $82,000 at the time that I am recording this. I'm recording it a little bit earlier. But for the most part, I'm not expecting any significant price action until we get through the FOMC meeting, which is why I think that today is probably going to be one of the most important days that we really kind of look into what the Fed has to say. But on top of that, we have over here from Rex, gold is putting Bitcoin to shame right now. Ultimately, we're really kind of focused on what gold is doing because gold has been pumping significantly. Now, why is this something to focus on? Well, I'm going to address that here in a second, but check out the dollar. So the dollar has been still pretty bearish over the last couple weeks, ever since that big spike up back in the middle of January. And again, this also has to do with the trade war. Dollar has been selling off ever since. A lot of people have been flocking to money market funds, gold, not so much risk on assets. So stocks and crypto have been selling off ever since. So a lot of people are looking at money market funds, they're looking at gold, and they're just kind of parking their money into whatever they feel is very safe. Again, that's why risk on assets like crypto and stocks have been, completely avoided during this time, and a lot of money is not flowing into them. But on top of the dollar selling off, remember what the dollar selling off actually means. It does mean that risk on assets are technically bullish, but the only problem is that nobody's actually looking into risk on assets right now. They're looking into gold and safe bets like money market funds. But this is at a time where Bitcoin looks like this and gold looks like this. Now, I have on the screen here the time where gold actually topped out on. All right. And if we actually look at this side by side with Bitcoin, all right, here we have the time in which, and we can kind of, get this perfect here. So we have the time in which the gold price per ounce and Bitcoin started to really kind of run. Gold topped out at that time. Okay. So a lot of people will say, well, oh, look at gold's doing very well, but why isn't Bitcoin following it? It's because Bitcoin technically doesn't. All right. So gold topped out right around this time, sold off, and then chopped. So it did this and then chopped until about March of 2022. Now, what happened in March of 2022? Oh yeah, that's right. Bitcoin sold off massively after when gold was already starting to rebound. Now, gold did continue to sell off. A lot of people were actually flocking to US dollars during this time, but then the markets bottomed out. But if we actually look at this time, a lot of people's overall idea around what gold and Bitcoin are supposed to do, side by side, is actually incorrect. Because if we look at this, all right, we could see that gold, when gold topped out and started to sell off, that's the time that Bitcoin went absolutely parabolic. And Bitcoin topped initially. This was the local top of like April into May. It topped initially when gold started to rebound a bit. And then we officially topped in November after gold started to create a bullish structure here. So when we think about gold right now being massively pumped up, I mean, listen, this is a very significant move to the upside. The real question is, when does gold hit its top for this cycle? Because again, it's pumped massively over the last 2 years, like ever since the macro bottom back in 2022. All right, it is now up roughly 7%, 88%. The last significant impulsive move on gold, which was back in 2018 into 2021 or 2020 actually technically, was 79.3%. So again, I do think that gold is getting close to a potential local top. It all depends on what happens next here. But I do think that gold is about to sell off, which we'll see the inverse happen for crypto, because what will happen is a lot of people will take profits from gold and shuffle them into possibly, crypto or stocks. And then again, you'll start to see the rotation from gold to stocks to crypto, or gold to, crypto. And then potentially, just from crypto to like money market funds or something safe. It's just a repeat cycle. But again, I see a lot of people comparing like gold to Bitcoin in a bullish way, saying like, all right, well, this is what we're going to see for Bitcoin. But we don't see that yet until, gold starts to kind of tumble a little bit and then form a floor and then just kind of chop for the next move up. But on top of that, right, if we are expecting, gold to be close to its topping point here, it means that Bitcoin should start to have a nice rally to the upside. On top of that, Bitcoin dominance is getting very close to that macro trend line on the upper side of this chart, where, we would expect a massive sell-off, which will lead to alt season. So am I extremely bearish right now? No. In fact, I think that we just have to get through these volatile days where we have these significant big, financial updates. But I do think that once we get through this, we should be looking pretty good once we start to see everything kind of line up perfectly. Now, again, TA is not perfect. In terms of what could happen next, it all really depends on what we do see from the Fed and what we do see around these tariff discussions and around the war possibly over in Gaza and stuff, because again, that is a big one. When we really think about what's going on here, war is one of the biggest negative factors that could ever happen technically on the stock market. When we think about war, it's always fearful. It's always terrifying. Markets get scared. Buyers get scared. We start to see the flock to dollars. It's almost like any black swan in the past as well. So again, we just really kind of focus on that. We see what's happening, throughout the day today, and we take it one day at a time. We take it one day at a time, but also we see what's happening with the Fed, because what the Fed is telling us and what we see at that press conference is going to be very telling on where the markets go for the next few weeks and even months ahead. So with that being said, if you guys did enjoy this video, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.